Welcome back. You're watching What's Hot on CNBC TV 18. We're bang in the middle of earnings season, and corporate India, an analysis among 156 companies finds that revenues are down 1% and net profit is up 2%. On What's Hot tonight, we ask, have corporate earnings been okay in this otherwise gloomy environment? Joining us, Vaidyanathan of Alchemy Capital Management. Vaidya, many thanks for joining in. Let me begin by asking you, what's your assessment of corporate earnings so far? Would you surmise it as average to decent in what is otherwise a gloomy environment?
Good evening, Harsha. Good to be on your show. When you talk about corporate earnings, you need to not look at them so much in absolute terms, but in the context of the market, you look at it in the context of what were the expectations and what got delivered finally. Coming on the back of what we saw in the October to December quarter for calendar year 08, the expectations in the market got scaled down significantly. Vis-a-vis the expectations, I would say that the results thus far, with save and except a few stocks, the results thus far have been more or less on line to marginally better than expectations. That's how we are assessing that. The only two caveats I would add there is, one, it's so much more important to wait for the balance sheet because there have been some accounting changes to be able to kind of go through with a tooth comb to see if some of these are really smelling clean. And the second is there is an option for companies to deliver just the audited results back in June. Not everybody is going to jump on and deliver the quarter results. So you're obviously seeing the better performers having come in and announced the results thus far. But overall, I would say in line or slightly better than expectations that the market was positioned against.
From what you've seen so far, Vaidya, which sector do you think has stood out and which has disappointed?
It's not so much as a sector that stood out. It's been more in line with the cues we've been seeing. Commodity plays have had a terrific run from February this year. So you saw stocks in that space kind of come with better Q-on-Q results. In case of banks, I think there was a kind of a greater pessimism around NPAs and NPLs. I think the challenge is the benchmark. We came off a season in 2008 March with very, very low NPAs at about 1.5%, 2%. The expectation was this could skew to 6% odd. I think that's kind of the final answer is somewhere coming in between. Yes, for the next 6 to 12 months, that could worsen as the real economy continues to worsen. But I think where we stand now, it's a lot less than where we thought it would be. IT sector, I thought, in the challenging environment, did reasonably well in producing the numbers. So you've got to look at the context of the environment they were in and what was expected of that sector and what it delivered.
How do you think the markets are positioned currently, Vaidya? From now to the 16th of May, are we likely to be in a range-bound market or is the sell-off imminent? I think the rally that you're in the middle of is a global rally. The event risk is unique to India, but that event risk unique to India has to sit in sync with the global rally. Globally, I think the rally of 30 to 40%, 40% in emerging markets, 25 to 30% in developing markets have been excellent, terrific. The upside incrementally may be limited because the underlying economic fundamentals remain challenging. With respect to India, I would say that insofar as elections are concerned, compared to a month and a half ago when there was extreme fear around the elections that you're going to see a complete ragtag coalition, I think while that probability exists, the fear has reduced significantly. We are now veering around to saying that one of the two major national parties has to play a lead anchor role in whatever coalition formation happens. So I think from the first instance of a government formation promising some stability and longevity, the market is kind of digesting the fact that the fear is reduced, the probability is increasing there. I think that's where the market is positioned. There are still unknowns out there, which we will know on the 16th of May. But the event risk has to be seen more in the context of global markets less in the context of India.
Let me just push this point once more on the elections front. Two possibilities. Assuming there is one political formation gets a clear majority, what's likely to happen as far as the markets are concerned? Possibility number two, if there is a fragmented mandate, how are the markets likely to take it?
See, the first one, clear majority, I don't think it's going to be. So you're going to talk about, will one of the two leading national parties have a significant share of the 272, i.e., will one of the two national parties cross 150 to 160? That's really the important thing. If that happens, then they can drive, they can set the mandate for a lot of things in forming the coalition. I think that would be seen as positive, and people will wait to see who are the people coming in to support them, what kind of policy support they would have. The second part of it, if you still have a fractured mandate, there will be an immediate downside impact potentially if there is no visibility. But like you saw in 96, 98, some of the better policy measures were taken in that kind of an environment. So if the market has to recover, they will wait for, say, who is the Prime Minister, who is the Finance Minister, what kind of policy measures. So you could have an immediate down impact, and if there are some positive news thereafter, the market could recover. But I think the two extremes are less likely, but somewhere in between is a more likely scenario, and that's what I think the market is factoring in now.
Vaidyanathan, many thanks for